Hello, everyone. Once again, my name is Charles Lejano, and today it's time to get real about the real estate industry, the property sector here in the Philippines, with a couple of my good friends who have a thing or two to say about it. Today, we will be joined by none other than Joyroy Bondoc, man himself from Colliers, and of course, that handsome dude to my right here, right part of my screen, Mr. Kenneth Stern, the country manager of Remax Philippines. Good day to you guys. Thanks for joining us today. So, Mr. Bondoc, you guys have been studying the market quite extensively, and everybody looks to you guys for inputs when it comes to advice that clients would inevitably need, to make their decisions. How big of a hit exactly has the Philippine property market taken, and how do we compare with other countries?
Well, of course, this COVID-19 pandemic has really been affecting the Philippine economy, and it's cutting across all sectors, including property. So for the Philippine property, we're seeing the office segment also being affected in terms of supply. We are likely to see a 26% drop in terms of new office buildings for 2020. So from the original forecast of 1.07 million square meters of office supply for 2020, that is likely to be pared down to about 780,000 square meters. Now, if we look at demand, initially our forecast was 900,000 square meters, but because of slower leasing activities in the market, that is likely to be at about 200,000, 450,000 square meters. Now, given all the supply and demand factors, we are likely to see a higher vacancy in the office market. So from 4.3% in 2019, vacancy is likely to increase to 5.5% to 7% for 2020. And as a result of that gap between the supply and demand and the rise in vacancy, we will also see office lease rates dropping for 2020. So that's a 17% drop in terms of office rents for Metro Manila in 2020. Of course, that slower demand is also spilling over to the residential market. Now, let's look at the supply for residential condominium. So from about the 14,700 that we initially estimated, that will be down to about 11,000. So there's about 3,000 units that will be moved back by about a quarter or two. We will also see a slower take-up of condominium units and slower leasing activities in major business districts. As a result, we will likely see a 15% drop for the average prices of condominiums in Metro Manila. And for leasing, we will see a 5.5% drop in terms of lease rates in major business districts before a slow recovery in 2021 and 2022.
Moving on over now to Ken, there is opportunity in every crisis, and real estate is no exception. Kenneth is in the business, of course, of training real estate professionals to guide clients towards ideal properties for sale or lease. No, but then even that industry has suffered because of the government lockdowns. What kind of landscape is Remax Philippines looking at now for the Philippine market at very least?
Yeah, it's an interesting one, Charles, and there's probably three main things that we're looking at right now that are kind of going to steer the direction of the company over the next few months and possibly longer. So the first one being the easing of the ECQ restrictions. Where that goes in terms of how soon real estate transactions can happen. We do have clearance that once we move out of the ECQ into the GCQ, real estate activities, including buying or selling, will be allowed. It's just a matter of when that's going to happen. These easing of restrictions will mitigate economic losses, especially in the real estate sector. So we are keeping a very close eye on what's happening there. The second one which we want to look at is remittances. When you look at a pandemic like this, a global recession, we have to look at other markets, not just ours. So remittances is really defined by other markets. So 40% of the Philippine remittances is coming from the U.S. And with 40% of that remittance coming from the U.S., you've got over 4 million people who are unemployed right now in the U.S. The biggest unemployment gap since the Great Depression, I'm sorry.
Mhm.
So we're very vulnerable to the way OFWs are spending their money right now, and how they're keeping it, and not spending in the Philippine economy. So that's a huge driver in what we're looking at. And the third one is the interest rates. Joey touched upon this, but I do want to talk about the BSP reducing the RR.
Mhm.
Basically, they want to make the economy more liquid. They want to encourage loans to be offered by the banks. They want to encourage spending. They want to calm the market down,
Mhm.
and essentially help people get more money, whether it's for retail or for corporate. And that's going to definitely affect the real estate economy, and how people are buying or spending or selling, is definitely correlated with the interest rates at the time. So with these three factors, we're looking at basically a lot of opportunity right now. We might see prices stabilize in some areas. We might see prices drop. We do see in the high end market, it's really holding because the holding power is quite strong. But your middle income properties, your lower middle income properties, people do need liquidity at this moment. So we are seeing some of the buyers coming to us and saying they want to drop prices. Or sorry, sellers want to saying they want to drop prices, and that might be a whole industry wide correction. So there is opportunity right now, especially if you look outside of Metro Manila. The provinces are definitely going to be on the horizon for a lot of investors. For those that want to get into real estate, the provinces are going to be an opportunity.
Mhm.
People are looking to leave congested cities, look for more space.
Mhm.
Consider this happening again. A second wave or a third wave happening in our lifetime. How are they going to spend the next ECQ? Do they want to be in a condo, or do they want to be in a house? So people planning long term buying out, outside of Metro Manila into the provinces or outskirts of the city. So these are kind of factors that we're looking at right now as kind of driving the real estate market residentially.
Yeah, that's an interesting point that you've made, Ken. The investor's mindset, the consumer's mindset has been drastically changed over the past few months, such that even the way that I would choose a real estate investment, or
Yeah,
say a new home for me and my family, definitely I would have more
yeah,
space in mind, and proximity
yeah.
to hospital, or other similar factors that may or may not have been as relevant previously, but that we'll get back to that in
Yeah.
a bit.
And there's
Just
also
go ahead.
opportunity for developers there as well. Developers looking to come into the market,
Mhm.
offering a product that might not have been available before. More green space, less common areas, more private space. If we look at just the BPO sector, only about 40% of that is work from home at this point. So you still need to be in proximity to work, but at the same time you need to value your private space as well.
Mhm.
So I think there's going to be a lot of design changes, just in the way that people live, and the way developers think in the
Mhm.
future. So that's a big opportunity as well to pioneer that.
All right. So that's provided that you're able to weather the storm, so to speak. No? So I suppose it is definitely interesting for most, and hopefully people can weather the storm despite all of these uncertainties. But then, shifting back to Joey for a second, what do you think is the biggest risk that exists in the Philippine property sector, that you'd say is more prevalent here than in other jurisdictions?
Well, I think here in the Philippines, as I mentioned, Charles, one of the greater or more important factors that's driving the demand in the residential market, for instance, is OFW remittances. And OFWs account for what? 10% of the country's GDP, and they
Definitely
fuel
remittances.
consumer spending, which accounts for about 60% of the country's GDP. Now, if you look at the demand for housing, so you have the affordable, which is priced from 1.7 million to 3.2 million pesos per unit, then 3.2 million pesos to 6 million pesos for the mid-income segment. These are the segments that anecdotally are being driven by the demand from OFWs also. So it's not just OFWs, but a good part of that demand is coming from OFWs. And we now see a lot of being OFWs around the world being displaced, being laid off. Some overseas workers that are employed by cruise lines, for example, the seafarers are being sent back to the Philippines. And that is a little worrying, especially not just for Metro Manila, but even outside of the capital region. We have provinces
Mhm.
such as Bacolod, Iloilo, Negros Occidental, and these are locations where the demand for the house and lot and lot only projects that are from that price range 1.7 to 3.2 million pesos really dominate in terms of a market share in Metro Manila. Now let me go back to Metro Manila. About 70% of the demand in the Metro Manila condominium market is coming from the affordable and mid-income segment. And as I mentioned, one of the major drivers of this segment is OFW remittances. Now, if the some government agencies, analysts are projecting a $3 to $6 billion drop in terms of remittance, OFW remittances, that will be a major dent to spending here in the Philippines. Well, not just for housing, but also for retail spending in general. And previously, we have noted also that when there are crises, the off-W remittances really are really affected. We saw that drop during the Asian financial crisis and the growth slowed down during the global financial crisis. So that's how big of an impact that drop in OFW remittances will be for the condominium market. Also, if we see an overall drop in the economic growth of the Philippines, we will see a dampened consumer confidence and as well as business confidence. And these are surveys being tracked regularly by the Philippine Central Bank. And similar to what we saw during the past crisis, when there are economic slowdowns, business confidence and consumer confidence normally drop. And these are two economic indicators that we also have to watch out for in terms of office space take up. Because when business confidence dropped during the global financial crisis, we also saw a nearly 50% drop in terms of office space transactions. When the consumer confidence dropped also during the global financial crisis, the rental increase of condominiums dipped. So these are just a few factors that we also need to consider. Plus, the COVID-19 pandemic also affecting a lot of micro, small, and medium enterprises. We have to note that these businesses account for more than 95% of total businesses in the Philippines. So if we will see a significant increase in unemployment, and a lot of government agencies are projecting a 1.5 to 2 million Filipinos joining the ranks of of the unemployed, then that will have a significant impact in terms of residential demand also.
Right. So interesting points there, Joey. No, you're saying there's really a lot left to be done in order to cushion the impact, and indeed, the biggest risk that the Philippine property market faces is the drop in OFW remittances and people not being able to support their previous investment and default, etc. But then, where all of that goes is the question. There will definitely be other opportunities that will open up in the market. Some of the things mentioned would be real estate developments in the provinces, etc. But then, from
Yes,
a
exactly.
government policy perspective, again, Joey, just to follow up
Yeah.
to your statement earlier, what do you think would be necessary to reinstill that kind of consumer confidence again in the Philippine economy?
Well, one major plank of the government, Charles, is for the government to really stoke the Philippine economy and to uplift the market is the infrastructure spending that the government promised since the start of this administration. You have to note that before the Duterte administration, infrastructure spending was like what, less than 2.5% of the country's GDP. But that doubled or even more than doubled during this administration. So that is a positive. And the
Mm-hmm.
Department of Public Works and Highways, as well as Finance Department, already mentioned that even if the government is allotting funds for the social amelioration program for the most affected sectors of the economy, as well as some financial support to the micro, small, and medium enterprises, it will not forget its commitment to build, and usher in the golden age of
Mm-hmm.
infrastructure. So the government already mentioned that even with the social protection programs being implemented right now, the construction of major projects will still be continued. So we're optimistic because one program that we believe can further decentralize economic opportunities and spur property developments outside of Metro Manila is infrastructure development. So you have railways being developed all the way to Bulacan, all the way down to Cavite, as well as Bicol. You have some rail and cargo projects being implemented or constructed all the way to Pampanga, Tarlac, and Pangasinan. So all these projects will help uplift the property space because we believe that infrastructure projects help raise land and property values. They help dictate the strategies of developers, and that means that if there are more projects in the countryside, then developers will follow these projects. And we also believe that with the employment being created by by these infrastructure projects, this PPP program, public-private partnership of the government, will help stoke not just the construction, not just the public infrastructure sector, but the economy as a whole. So if the market starts to recover second half of 2020 and we see an upside in terms of demand for the property market starting 2021, then this is one factor that will help further improve the economy of the Philippines as well as raise the competitiveness of the property market, and that is infrastructure implementation.
Right. I'd like to shoot
Yes.
the question over to Ken. Just before all of this hit the fan, there was much buzz about real estate investment trusts. Joey, I'd like to hear about your insights here as well. Where does that take REITs now? If it was hard enough to get it off the ground before, what now?
Yeah, REITs have been on the horizon for the for the investment market now for quite some time. As we know, ever since 2009, it's been approved, and it wasn't until recently, as of late last year, that basically there's been some approvals that will allow the REITs to come in terms of agreements on dividends paid and such. I think that investors are going to take a hard look at the real estate market as a viable option to diversify their portfolio, and REITs being the stable, conservative investment, in the real estate sector, but not actually owning the property and having to manage it yourselves, but
Mhm.
using an investment a fund manager to do it for you. It's a great opportunity that hasn't had the Philippines hasn't had yet. So there's potential for very good returns with the REIT investment. You're looking at an industry and a sector that's ready for it,
Mhm.
especially now that the market is so volatile and we don't know what's happening in other sectors. The real estate sector is probably one of the safer ones you can invest in at this point. So when they do launch, I think that it's going to be very well received from the market, which hopefully will be sometime later this year, if not early next year.
All right, thanks for that, Ken. How does the REIT market figure into all of your analysis, Joey?
It is a good source of income for the property players, for developers, a good source of alternative funding, especially if they want to redevelop their properties, if they want to acquire properties within integrated communities, or if they want to expand further outside of Metro Manila. This is one source of alternative funding that they can use to build more properties, to develop more projects outside of Metro Manila and further diversify because of course, if you have additional cash generated through REITs, you are not confined to the traditional property segments such as office, malls. You can also diversify into logistics, hospitals, especially now that there's a greater demand for healthcare facilities or infrastructure projects such as toll roads. So it's a good opportunity. I think we can still wait for one more year, before REITs can finally can
Hold their
finally
ground.
be launched again. So yeah.
Right, excellent. So it's still the same wait and see that we had before the COVID-19 pandemic. No? I'd like to move on over to Ken. Ken, as Remax is a global brand, you're privy to what real estate is like all over the world, not just the Philippines. No? How do we rate relative to other ASEAN countries in terms of like prospective rate of return, pre-COVID, and what's changed since this pandemic broke out?
Yeah, I think that in the past, the Philippines has been a major hotspot for investments.
Mm-hmm.
Compared to our Southeast Asian neighbors, we have a great workforce that speaks primarily English. There's a lot of foreign enterprises entering the country here. Property rates are rapidly increasing, and our GDP is one of the strongest in the area. But after COVID, we'll see how it turns out. I think. The government has done a good job with with the lockdown, in a sense that we were the first one really in Southeast Asia to go on a full lockdown. So hopefully, we flatten out the curve soon enough where we can get back and really bring the economy, up to speed again. Once, most of the restrictions have been eased out. So I think there still is opportunity compared to other Southeast Asian countries. And when you talk about investment and opportunities here, we still have some of the cheapest lease and land prices in the area. And then I think that, once the economy gets back, there's still going to be that, that drive to come to the Philippines and set up offices here, because we do have a, strong BPO workforce. But what I think is something that we have to consider, something we have to look at is, Joey was talking about infrastructure. Internet connection is somewhat of an issue in the Philippines. And I did read an article recently that the BPO's future is uncertain because with the sudden surge of work from home globally, the amount of outsourcing has increased exponentially, and they are looking for countries outside of the Philippines with more stable internet connections that can handle that amount of volume. So infrastructure is going to be a big part of it, and if we can get that infrastructure into the provinces and have good internet connection in these areas, I think that there is an opportunity to capture some of that clientele instead of lose them in terms of the BPO industry. So I think if you're looking at residential properties in Asia, Hong Kong, Singapore are still one of the most expensive areas in the world. Hong Kong is, a little bit on the upside of the curve compared to us. So there's opportunity there. But compared price wise, we're much more affordable and much more attractive. So I think if you're looking for that that aspect of your investment where you get good bang for your buck, a country that is on the up, there is still a lot of opportunity in the Philippines compared to other Asian countries.
Right, that's very reassuring coming from the country manager of Remax Philippines. But then one question I would like to ask you, Ken, is how do you keep your professionals, the broker owners, the franchise owners of Remax and their agents, how do you reinstill or how do you spark optimism insofar as their ability to sell and lease, considering, well, undeniably, let's just get it out there. It's been dead, more or less, for the past few months, and hopefully things will get better over the next few weeks. But then, what does Remax Philippines generally have in store for all of its agents?
Yeah, I think that you're right that volume has dramatically dropped down since the ECQ started, because a lot of our transactions have been held up. Most of the government agencies are on skeleton force. We can't, do title transfers and things like that. So definitely, there's been a massive slowdown in transactions, which is basically the brokerage industry, the buying and selling of properties or leasing properties. So we have taken the approach of investor relations, keeping in touch with their clients. Education is a big one. Now is the time to professionalize your way of doing things, make things a bit more efficient. Really hone the skills that you haven't taken time to do before because you may have been too busy with accounts. So it's a time of reflection, also growth for a lot of our agents. But I think the main idea that we've been talking about today has been opportunity. And if you look at the market right now, it's shifting towards opportunistic. We have a highly volatile market, but at the same time, there's a lot of opportunity that is presenting itself now that hasn't been around in the last decade or so. So we are highly optimistic that once restrictions loosen, there's going to be a lot of buyers looking for where they can capitalize and where they can get maximum returns for their investment, because these opportunities haven't been around for really since the last recession, whether it's the GFC or the Asian financial crisis. So there is opportunity, and it's a matter of finding it. So we think that communication is essential in the brokerage industry. We're digitalizing everything now, but at the same time, brokers are the ones who know what's happening. There is no centralized database for all of properties all around the country. So what we talk about internally, the properties that we know are on the market, brokers have their finger on the pulse essentially, which a lot of buyers want to know. So we've been in very close communications with most of our clients, in the sense that we're keeping them up to date on what's happening in the market. When sellers start to talk about loosening on asking prices, when rents start to get waived and deferred, when interest rates start to drop, that's when the opportunities happen, and that's sort of what we're kind of coming to now. I think in terms of a buyer, there's still time to wait. But at the same time, if you don't know what's happening now, it might be too late to kind of pull the trigger once you find out. So the important thing is to study and to learn and to speak to the brokers as early as now, because otherwise you'll miss the boat for the opportunities.
All right. Once again, thank you for your time. That was Kenneth Stern, Country Manager of Remax Philippines. Thanks for your time, Kenny.
Thanks, Charles. Appreciate it.
And Mr. Joey Roy Bondoc, the Joey Roy Bondoc from Colliers International. Again, thank you for your wonderful insight once again, gentlemen. Again, this has been Charles Lejano. Thanks for allowing us to get real with the real estate industry, property sector in the Philippines. That was an amazing conversation with you, gentlemen. Maraming salamat. Thanks.